Look now at markets in this region, starting with the BRVM. The BRVM 10 index closed trading at 247.15 points, up by 0.36%. Meanwhile, the all-share index, which is also the BRVM composite index, gained 0.5% to close at 218.88 points. A total value traded dropped to 546.71 million CFA francs. The currency for the region is trading at 497.03 points against the US dollar, now putting its year-to-date change at 0.49% rather. And in Ghana, the GSC Composite Index closed trading at 1,892.62 points, up by 0.55%, keeping its year-to-date change at 57.6%. On the other hand, the GSC Financial Stock Index closed at 1,639.88 points, down by 0.45%. The year-to-date change for that index stands at 57.7%. On the currency front, rather, the Ghana cedi closed at 2 cedi to the dollar, and the year-to-date is at 5.13%. Well, back here in Nigeria, the Nigerian all-share index closed yesterday on a positive note, gaining 67 basis points to cross the 40,000 mark. It closed at 40,012.66 points, while Fort Oil, Dangote Sugar, CCNN, Honeywell Flour Mills, and May & Baker all closed in the green after appreciating by a maximum of 10%, while Morrison Industries led the losers chart with a loss of 9.87%, followed by Port Paint, Ikeja Oil, and Eternal Oil. For a look at activities in Nigerian equities market, I'm now joined in the studio by Kayode Akindele, a partner at 46 Parallels. Well, thank you so much for joining us. Well, Kayode, the all-share index crossed the 40,000 index mark yesterday for the very first time this year, representing a year-to-date performance of 42.5%, now one of the best performing bourses on the continent, if you agree. Now, can we attribute this strong performance to the growing Nigerian economy, or can this growth be sustained as well?
I think the Nigerian economy is growing, but I think there's a lot of interest, especially in the consumer sector, from both local and foreign investors, and that's led to part of the boom. A lot of normally it's the banks that lead the boom, but if you look at what's happening right now, it's a lot of the fast-moving consumer goods. Whether it's sustainable, we're not sure. The sovereign wealth fund, Nigerian sovereign wealth fund, is supposed to enter the market this month or next month, and that should provide a further boost to the market. So probably in the medium term, yes.
All right now. Well, we have also seen local and foreign investors push the counters higher for consumer stocks as a result of stronger appetite. Excuse me. Now, the likes of Dangote Sugar, now it gained 10% at the close of business yesterday, trading at an all-year high of 12 naira 67 kobo. It has also gained about 39% in the space of 1 week. Can we continue to anticipate this upward surge?
I think across the board, yes, because there's a combination of factors. There's interest in the market, but there's also very little liquidity in the market. If you look at portfolio investors, looking at many multinationals like Nestle, so the bigger conglomerates like Dangote Cement, Dangote Flour, and there's very small liquidity. For example, Dangote Cement, only 5% of its outstanding shares is actually in the market, and out of that 5%, South Africa's PIC took a big chunk of that this week. So because of the small liquidity, the interest, you're going to see these kind of valuations. And then you have to start asking whether these valuations are actually in line with the growth in the economy, or we're looking at another overvaluation situation.
All right, away from the consumer sector, now Okomu Oil Palm Company has revealed plans to build the biggest oil mill in Africa. To boost yields from oil palm and rubber plantation into the country. Now, also, this is in line with plans to reform the agricultural sector. It's a campaign that's been going on for years now in Nigeria. Well, can you tell us more about this development and the prospects therein?
Well, Nigeria in the 60s used to be the biggest exporter of palm oil. And due to lack of investment and lack of interest, it's kind of gone down. There's been renewed interest, especially with the palm oil price in the world market, to try and grow companies like Wilmar and some local plantations coming back on stream. Now, the mill is a good idea, but the problem is that is the mill going to be used mainly for local produce, stimulating jobs in Nigeria, or for imported palm oil, which would then be milled in Nigeria for the Nigerian market, because the Nigerian market is still the biggest market in West Africa. But there are plantations all across West Africa have been put into place, like in Liberia, which are larger than the local markets, and most of them are for exporting to Nigeria.
Wow. All right, now, a lot of sectors have picked up this year so far, although we can't say that the same for the insurance sector. What in your opinion needs to be done to turn this report around?
In terms of the insurance sector, I think the insurance sector is really a lack of confidence in the sector. I mean, the regulators try to bring recapitalization to make the insurance firms bigger, but the amount of insurance products actually utilized in Nigeria is very low per capita compared to even other developing countries. So that has to be increased. I think things like, for example, in the life insurance sector, you need to push for them to be compulsory life insurance for pension as well as for mortgages. And when mortgage sector kicks off, more life insurance products will help their market. And I think general insurance as well, there needs to be proper the rules for having third-party insurance and household insurance, all those need to be enforced. And once those start getting enforced, you see the insurance sector pushing up.
Right, well, I guess it has to also come with a corresponding response from the